Good morning, everyone, and thank you very much for joining me. This is the morning market review, and it is Thursday. It's the 7th of March. My name is Russell Shaw, and I'm a senior market specialist at FXCM. I would like to just bring up our disclaimers, and what I'll do is I'll just keep the camera on until the end of the disclaimers, and then I'll turn it off so that we have a better bandwidth. But I'm hoping that today's stream is better quality than yesterday's stream. So just let me know. All right, let's just keep the high risk investment warning on. I'll keep this on for a few seconds. Hey Raj, good morning to you and welcome. Okay, brilliant. All right, let's go ahead. Let's bring up our market commentaries disclaimer. What I'll do then, if it sounds okay, maybe I'll just keep the camera on. If there is any sort of distortions, I'll turn it off. But in the interim, I'll keep it on. Let's go ahead. Let's bring up the real rate. Okay, so we've got the real rate. We've got the real rate in our top chart, and we've got the US dollar in the lower chart. And you can see that in the real rate, we've been talking about the reference candle reversal. Okay, so the reference candle reversal has been locked in for quite some time, and we've been looking for the dollar to make its reversal. It looks like it is certainly starting. Here's condition one. Here's condition one, and condition one would be the highest high in at least 3 candles. Then we've got condition 2 over here, and then it looks as if we're finally getting condition 3 over here. We're closing below the lows of the reference candle cluster. So we're not quite sure, by the way, we're not sure if we're getting the condition 3. We will only know if it's a condition 3 at the end of the trading week. Okay, at the end of the trading week, we will see where it closes, and if it closes below the green line, then we're in business, right? And that's off of the back of the the testimony by Jerome Powell on Capitol Hill. Now, let's just take a look at some of the currency pairs we're looking at yesterday. So let's just take a look at euro, and we'll take a look at the euro on an hourly basis and just do a debrief there. So just going to bring that up. So this is the euro, okay, and it is so here is the crossover that we drew in yesterday. Here is the crossover of the stochastic that we drew in yesterday, and then we said that if we can get the stochastic moving into the upper quintile and holding, then we're going to have the swing. Well, we got the swing, okay, so we've got the swing. So just so cooperated with each other yesterday. Hey Kim, good morning to you. Let's just take a look Sorry, there should be sound now. There should be sound now. I accidentally hit the mute over here. I'm begging your pardon. Okay, so here is the crossover of cable that we hit yesterday. Okay, here is the crossover that we had of stochastic, and then it's not quite as smooth as it was with euro. You can see that it hit the upper quintile, but then dipped, and then it went into it. There was by and large a swing. This one would have given you a little bit more stress if you traded cable. If you're trading cable over euro, I think you would have been a little bit more stressed, just because you had this big pullback over here before it kind of caught up. So we go back to the euro. Okay, so this is what we looked at first. We go back to euro, and you can see it was a lot smoother. The ride was much smoother. So we had a situation yesterday where the technicals and the fundamentals cooperated with each other. So that's a bit of a debrief of what we did yesterday. So it looked like the analysis yesterday went really well. Let's go and just do a top-down analysis of the US dollar. And again, I just want to reiterate, it looks as if, I'm not sure where I lost you in terms of the sound, it looks as if the dollar is starting to do its reference candle reversal, okay, following the real rate. So let's just do so let's just take a look and see what's happening with the US dollar. I don't think that the signals today are going to be quite as sweet as they were yesterday. Let's go ahead and just take a look at the US dollar. We'll do a top-down analysis starting off with the weekly chart. Okay, so you can see here is the dollar. I'm going to move this over there. This changes from red. I think we can make it sort of lime green. So here is condition 1 we've talked about, condition 2, 3, and then we'll see how it ends at the end of the week. But take a look. Where is the dollar in reference to its 30-week exponential moving average? It's starting to break below the 30-week exponential moving average. Where is the RSI? The RSI is pulled back. It's looking as if it's about to cross below 50. So if it crosses below 50, then we have a negative momentum on the weekly chart of the US dollar. The volatility starting to show now. It's taken some time. And what we suggested, okay, and this was a suggestion a couple of weeks back, is that if you take a look at the daily chart of the US dollar, I'll just make this the daily chart, you would have one, two, okay, 2, 3, and now it looks like we're getting into the next 1, 2. So looks like we're getting into the next leg down. Now 2 3s typically would be either flags, wedges, or pennants, right? And here, so let's see what we have here. And probably got some sort of rising wedge here. Yeah, there we go. So you got the dollar breaking down. So a typical technical correction. It's what we call a dead cat bounce. so to speak. So that's looking pretty good. Let's just go back to the weekly. And what we'll do here on the weekly is we will just monitor the interaction between the dollar candlesticks and the 30-week exponential moving average. And effectively, we want to see the dollar either above or below the EMA. In this case, I would prefer to see it below the EMA. And I'd like to see the EMA turn down. So if the exponential moving average turns down, that's the filter in terms of helping us filter out trend. And I'd like to see the RSI dip below 50 and hold. And if we are dipping below 50 and holding, then we're potentially starting to swing, and we're probably starting to swing in the same direction, hopefully in real rates. And why I say hopefully, it's because then we've got a fundamental basis for our technical analysis. Technical analysis is always going to be stronger when we have a fundamental basis that we can attach to it, right? So that's what we want to take a look at and see if we have the fundamentals lining up with the technicals. Let's go down to the dollar daily, and let's just see if we getting anywhere near a trading opportunity. So what we'll do is we'll see if we can synchronize the hourly with the daily dollar chart. So let's just go through to the daily dollar chart, and here we can see the US dollar with our zones. It's now dropped into zone 3. That's the bearish area. That's between the lower blue and the lower red. Okay, so that's giving us a directional bias. That's good. And what's happening with the Bollinger Bands here, guys? What's happening with the Bollingers? They're starting to push outwards. The top Bollinger is starting to push up. The lower Bollinger starting to push down. That's that volatility, Kim. Remember when you said, well, we're not getting any volatility with the dollar, and you were quite correct. You can see if we go back, there's no volatility over here. All of a sudden now the volatility is starting to price in, okay? And that's exactly what you said. As traders, we need that volatility, right? So here it is. Here's that volatility, okay? Now take a look at what's happening with the RSI. RSI has dipped below 50, okay, and we are now on the bearish side of the momentum. Okay, so we're looking pretty good here on the daily. Let's go down to the hourly chart. Let's see if there is some sort of cooperation between the two time frames. Okay, just going to go ahead and bring up our US dollar hourly. Okay, this is the hourly. It's not quite as sweet. We don't have the sweet spot that we had yesterday. Yesterday we drew in the movement down over here in the EMAs. We drew in the movement down in the stochastic, and then we kind of hugging now the lower quintile. And gee, we had a terrific swing on the US dollar. So that started yesterday. We put in this support area, and we wanted to see if the support area would hold. And of course, it didn't hold. It folded. Okay, and the idea here is the longer that we maintain in the lower quintile, okay, the greater the pressure to the downside. So the greater the pressure to the downside, the more likely we see lower dollar prices. But do we want to get in at these prices? Well, that's a decision you're going to have to make in terms of your trading plan. Are you willing to accept that risk? As long as we hold the lower quintile, then potentially something like that will pay off. But another option, and probably a safer option, is to wait for some sort of pullback and then try and get in on a rally in the downtrend. So that's perhaps something that we want to just keep an eye on. Okay, so it's not quite as sweet as it was yesterday. All right, now just to end off, I want to take a look at S&P 500. I want to take a look at Nasdaq, and I want to take a look at Nasdaq 100, and I want to take a look at the Russell 2000. And what I want to do is I also want to look at the equal weighted indexes, okay, because I want to see how the interaction between the two are doing. To do that, we'll just go through to our weekly, okay, and what we'll do is we'll just bring in the SPX 500. And you can see that we are overbought on the SPX 500. That is nothing. Sorry, let me just share that tab. Here's the SPX 500. You can see that we are overbought on the SPX 500. That's nothing new. We've discussed that. We've also suggested that there has to be a normalization at some stage on the SPX 500. But, now I saw a poll on LinkedIn. Is this a bubble or is this a bull market? My opinion, subject to correction, is that we're in a bull market with overbought tendencies. Why would I say that? We'll just go through to RSP, okay, which is the equal weighted S&P. And we're not overbought there, and we've got a nice trend, a higher trough followed by a higher peak. I would expect a pullback. I think that would be healthy. I think then we would get the next higher trough. Okay, let's just take a look at Nasdaq. So let's just bring up Nasdaq 100. Okay, and you can see, lo and behold, we are overbought here. Not quite as severe as the S&P 500. However, there is an overbought condition here. We are above 80. Okay, so some sort of pullback, but how unhealthy is the fact that a market cap weighted index has shown an overbought condition? Well, what we could do is we could put in a code called NDX and then E for equal weighted. So yeah, we've got the Nasdaq 100 equal weighted. Just pop that in. Okay, and we're not quite overbought there, and we've got a terrific, again, trough. Okay, let's put in the peak over here. Put in peak. Here we've got the higher trough. I'm just going to make it HT. Right? Well, that's terrific. And here's the HP, higher peak. And now I think it would be quite appropriate for us to get a pullback here. And that pullback, as long as it is as long as it doesn't take out the previous higher trough, it would be a dip in the uptrend. It would be a dip in the uptrend. So I think if we take a look at the Nasdaq equal weighted, to me, it's not showing signs of froth. But most importantly, the equal weighted index is showing a uptrend, a higher trough by higher peak. So when we equal weight it out, still looking healthy. Let's take a look at one more, and then we'll end off. Let's take a look at the Russell 2000, which is the small companies index. We'll just use the FXCM US 2000. So this is the Russell 2000, and here it's not quite as healthy as the large companies, because we do have this really sort of obvious resistance area here. But what we can do is we can put in our trough. Okay, and this is the market cap, and we're gonna take a look at the equal weighted one as well. Peak. Okay, peak. Put in the higher trough. Okay, I'm just gonna call it HT, right? And now let's put in the HP, because we do have an HP here. So we've got so even the small companies, although they are not running quite as smooth and as hot as the large cap indexes, we do have a higher trough, higher peak. So we do have a uptrend on the small companies index. That's terrific, and we're not overbought. Well, we're going to bring in the EQAL, Invesco Russell 1000 equal weighted. So now we're looking at an equal weight. Okay. Again, it does have a lot of resistance. Okay. It's not running as smooth. Ideally, I would like the smaller companies to be running smoother than they are, but they obviously are just having more trouble in the economy than the larger cap companies are. And that makes sense because they don't have the facilities available to them that the large caps would have. But take a look here. Look at this. Look how terrific this is. Trough. I'm just putting in a T. Look here. P. Once we've got the references, here is the higher trough. So guess what? Even the equal weighted small companies is running in uptrend because we've got a higher trough, higher peak. What we would want to see is a series of higher troughs, higher peaks. We would want to see the bull market really expanding. But I don't see any signs of a divergence or a dichotomy or a disconnect. That to me means that are we in a bubble? Are we in a bull market? My preference, subject to correction, is bull market. If we get the pullbacks, yes, while the media headlines are going to be shocking, I think that's actually healthy, and we'll get the next higher trough, and then we'll look to take advantage of that so we can get involved in the next higher peak. Okay. That's as far as we shall go this morning. I hope that you guys found that useful, and I'm hoping that the quality of this live stream was better than yesterday's live stream. If you found this useful, please, I would appreciate it if you clicked on that boost button. It would just help disseminate. It would just help disseminate the live stream. What we will do then is conclude at this point. I want to wish you guys a good day, a good evening, and we will do it again tomorrow morning. Thank you very much. Hey, Anna, and we will conclude at this point. Thanks very much, guys. Speak to you tomorrow.